Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, March 8th, 2024. It's 12:20 p.m. as I'm starting the video, so about mid-session. Just want to do a quick update on really the equity markets and a few things I'm watching. We'll keep it limited to trade ideas, and I'll just say right now, most of these are going to be short trade ideas, although I'm going to go over, there's actually a couple longs in here. I'll do a little different. I have an alert. I use different charting platforms, but on one charting platform, I have some alerts, and I got quite a few triggered today. And what I'm going to do is go over the recent alerts that I've had go off, because some of those are either actionable trade ideas or setups. So that's the takeaway. And again, there are going to be a couple longs in there, mostly shorts. It won't be a super long video. Let me just give you a quick update on QQQ. QQQ put in that marginal. Remember, at the close we had almost an equal high. It was literally, I think, like 3 pennies above on a 448 point security. It was like a fraction of a basis point, one fraction of 1% higher. And now it's a clean, either way, it's still marginal new high. We only went up above like 0.4% above where we were yesterday. And so that's the divergent high, all the better on this 15-minute chart. And I'm doing the video now because the first target's hit. Remember, when I put these targets out there, they're actual support and resistance. On longs, they're resistance levels, and on shorts, they're support levels where a reaction's likely. If you see two lines close together, that's a zone. So yesterday's arrow breaks, I had it going here, and then that's the top of the zone. So the buyers are likely to step in anywhere from here to here. And as I always say, my targets that I list years back, I used to sit there and take the time to go through and manually adjust it. Say T1, supports at 440.76 right there. I would then go up 440, somewhere right above that level, just kind of eyeballing, and based on my experience in the trade, put it in. But I've told for over a year now, the last couple of years, I made clear these are the actual support levels. So if you are targeting one of these targets and you plan to get out there, then you want to set your buy to cover limit order slightly above it. The reason being, sometimes the buyers step in early, so there's no reason to try to milk out the last fraction of a percent on a trade and risk the buyer stepping in a little bit early and seeing it reverse on you. Now, of course, another strategy, if you're going for more downside, I certainly believe there is in here. I give you a couple. I just expected a reaction off this first target zone and then a break of it, and then we go down here, and that's my minimum near-term swing target. So that'll give us from yesterday's highs, where I threw it out there, that'd be about a 2.6% drop, and again, that's about 4. I'll round it off I'll leave it, whatever. Just what's the difference? 434.97. So it's so close to 435. We'll just make that round number, and that's it. So active traders can book the quick. From yesterday's high, it was a 1.2% drop. Not much, but again, if you do 1% just once a week, every week, there's 4.3 weeks in a month, 52 weeks in a year. Do the math and on that one, and you're doing pretty good. You're not going to bat 1,000, but even then, do the math on whatever success rate you're having. Alrighty, that's it. That's a quick update on the Qs. While I'm on QQQ, since it's related, let's go to the Mag 7, or formerly known as Mag 7 stocks. There's Microsoft still testing the yellow trend line, the back from below. Next sell signal to come on 397. Of course, resistance is resistance until unless taken out when a trend line is broken. Here's that same trend line on the 60-minute chart. You can see it's very clean, very clear trend line, and so that's TA 101. You break down, back test, and ideally now want to see a rejection and then a break. That's the big level right there, 397. So the way it works. If I already have it, I believe, on the daily. Set an alert there. Can't hurt to have more than one. And as I said, I believe there'll be a day very soon where, like popcorn, these alerts going to be firing off. And so again, I'm going to get to some others that I had today. Covered Apple. I said that's, if anything, a long, not a short, because we've already dropped. This one's one of the Mag 7. Very unusual to see such a despair, especially Apple. Tesla was kind of on the bottom tier of the Mag 7 when they called it that, and it long since lost its magnificent title. I'm more of a it's more my style. Beat down stocks at support if there's divergence. And I'm not in it. I don't care. It's more I'm watching this one, as I told you, to get cues on the market. But we're at those key purple support levels, and that's Apple. So it's going against the grain today, pretty much against the rest of the pack. And like I said, it's only going to help to see it take out 166 right there, 166.60, whatever that is. NVIDIA, potential. There's a question mark here. BEC, that means bearish engulfing candle. Depends how it closes the day. We're only halfway through the trading session. This is a volatile stock. It can ramp it up. Like I often mention, they're not 100% accurate, but they're very simple trading strategies. And you see a bearish engulfing candle, you can take it, especially if you're heading into the close and you're going to get that, meaning you have to, the body of the candle, the fat part has to engulf the body of the previous day's candle. And so if you're heading, in the final minutes of trading and, or even the last 30 minutes, looks like you're going to get it. You can take a shot and then put a short above, a stop loss above it. But the big level to me is still this trend line. And then even better. And I'm going to make that yellow because I still think it's significant. We had the pre-earnings whipsaw, I call it, right before earnings. I tried to extend it. I want to make it yellow. It's a key level, but then 742 remains my big level. And then the purple line below that is even bigger. The purple lines are the most significant support levels. Amazon still well above 165.74, my yellow line, but still has that divergence and building. Alphabet, again, this is, you look at these, this is key support. It's tested the 200-day moving averages, very, very significant support levels. And as I highlighted, the other day, that's where if you're a bull, that's where you buy pullbacks to the 200. And if you're a bear, you wait for the 200 to clearly get taken out. So it's also, remember NADZZ had pointed out what's a potential head and shoulders topping pattern with a left shoulder ahead, a right shoulder, and then the neckline right here. And it's a back test of that neckline. So although it's not optimal to go short right after a successful reversal on a test of the 200-day moving averages, you could make a case to short the back test of that trend line, the neckline. I'm sorry. Again, it's easy to just, for me right now, analyzing these market leaders really in trading the Qs, QQQ. You don't have to worry about the volatility of any one stock. So again, I do this and I analyze them collectively. I will say if it comes up a little bit more, you have that nice downtrend line, and I would expect a rejection there. If it breaks out, then that's net bullish. It's not the end of the world bullish. It could mean new highs are coming, but it's, like I said, near-term bullish to see it. And there's also about 139 as price support there as well. So bottom line, we need to take out the recent lows because we've already tested these 200s successfully. And so if you want to set an alert, I'm going to do it right now. And I'll give you, because I didn't remember it. Before I didn't have a yellow line on here. I wasn't too sure about the charts. Now I do. Now I know the 200s were tested, taken out, and the lows on those 2 days where they cut it intraday was about 130.60. And so now I'm going to set an alert there. And whether we get this alert soon or months from now, again, it's not just any one of these. Collectively, I want to see the majority of these breaking support. 454.43 still way well above it right now on Meta. So nothing there. Tesla's still coming off that divergent low, oversold at a support zone, but kind of just not doing much today. So all but two of the Mag 7s are down. Alphabet and Apple, the two most bullish, I've highlighted recently, both at support and already beat down compared to the rest, that other than Tesla that haven't already, fallen out. Both Apple and Alphabet had key support levels, and they're bouncing today off those. So when those levels get taken out, that should open the door to a much bigger move down. Now let's roll into some price alerts. So, all right, alert console. Let me see. Is this sorted by most recent? Oh, here it is. Okay, I'm on another monitor, guys. I have this on another monitor. I'm just going to queue in. So this is what the last, in the last couple of weeks, some alerts that I had go off. Somebody, actually, two different people on the site brought up ANF. They brought up back here, said it's going, parabolic. It's a steep uptrend. It's not technically speaking, I'm a very literal and technical person. It's not a parabolic uptrend. You'd have a parabolic trend line, that would be increasing in slope. But it's certainly a steep uptrend. And I jokingly said, well, I first said, no, you can't short it yet. There's a trend line. You got to wait for this trend line to go. And so we got an alert today. It's not now. Again, if you have to squint, you might want to give it the benefit of the doubt, but we are slightly below it. So I think a little bit more. If we pretty much build on today's drop, take out today's low, we're trading at 120.83 right now. Much above that should do the trick. And, some maybe a half position. Again, the overall trend in the stock market right now is bullish, so you got to be careful with shorts on individual stocks, but maybe a half position and then a full position if and when we get a daily close. So if we're heading into the close today and the stock's down, it's down 5.5% now. If it's down another, down here, then I think it's safe to take it to full position, set your stops appropriately. No reason, appropriately would be a solid recovery back above the trend line, a solid daily close especially, or a close above the recent highs. I don't even have a target on this thing until about 48.90. Like I said, when somebody brought it up, I jokingly said, what did they, figure out the formula for cold fusion? This is an Abercrombie and Fitch, clothing retailer. And it's just gone crazy there. So take it, leave it. Again, that would be, if we get, if we can break this level and give it up for good, that's going to be about a 60% drop. I might, if anyone's interested and takes it, I just don't have a lot of support levels along the way. And I think that's reasonable based on what I see on the daily and weekly chart, by the way. So moving on, this one got an alert this morning, and I almost got it out to you. My alert triggered right after the open. I've had an alert on here at 9:31. I get the alert, and I was going to share it. And I know just from the board, it seems very few are interested in shorting this market. So, and now either way, it's also hit not my first target. This is my first support level where I think the buyers are going to step in. We get a reaction. So it's still a trade idea. It's a trade idea one of two ways. It doesn't look like we're going to regain that trend line at the close. Probably, I don't know if they reported or what. It's a big drop for Costco, 7.4. And by the way, guys, this is right behind Tesla. You talk about the Mag 7. This is the 9th largest company by market cap in the NASDAQ 100. So it does move the needle. And it also says, hey, what's going on here? So with Costco, kind of maybe a tell to the economy. Anyways, there's a support right here about where we are, called about 727. Today's low, pretty much. I have it at 720, 783. I think if that's taken out, it'll open the door to the next target. And here's my target, 678, 60-ish, 612, 89. We'll call that 613. And or the uptrend line. So the way that works is there's a primary uptrend line right here that I believe Costco will come and visit. It even goes to the left of this chart. I have to go back farther. That trend line comes back. Wow, got to go all the way back here to 2009. And then there's this other secondary trend line. That must be the one right there that I'm looking on my daily chart. I just flipped over to so it's a key trend line. And the way this stuff works is I think that trend line will be hit based on the technical posture of the stock, both on this daily and the weekly chart. So maybe a reaction here when that level's taken out, go down there, they'll step in and buy it. And so by the time it gets down to my final target, about 613, that trend line should come in together and you'll have dual support, and that would be a good area if the chart's confirmed to cover a short and reverse to a long position. And if so, and if it's hit, that's going to be about an 18% drop in Costco. That was today's alert. I had DHR. So you always got to check these. This is a diagnostics and research company. And there's a wedge, but it's right on the trend line. I've had quite a few alerts, especially on the indexes go off. So when the daily chart, you want to look at the daily, look at the candle, see if it's just a post open. A lot of these alerts, by the way, guys, will fire off in the morning when there's opening imbalances, and that's usually if you're going to get an intraday spike, that's often when they come. And so you can, zoom in here a little bit. There it is. I like to go down to the 60s to hone in. It gives you a little cleaner, more visibility on the trend line. So that one hasn't yet broken, and that's the one I would watch. So there's a trade setup for you, not an actionable trade, but a trade setup. And I'm going to put another target right here. And anyway, if you're interested, I'll give you, there'll be a stop along the way right here. There's some minor support around that area. But this is where I think it'll swing down to a minimum and maybe even a back test of this trend line. Next one up was today as well, first thing in the morning, right after the open. BLBD, Bluebird. If I'm not mistaken, they make buses, I believe. And it's been a while since I follow it. It's an auto manufacturer. And there's the beautiful little bearish rising wedge. That one's broken down. And so if it pretty much comes back down towards today's lows, that should do the trick, I believe. So right now, again, it was open at the open. You had order imbalances and it spiked down and they brought it back up just a little bit. And so I think if it turns back down and gets anywhere near this morning's post-opening lows, then you're going to get that daily close. And I need to sometimes, I set these alerts and then I go on, and if I don't already have targets, I'll mark them up. So there it is, 29.82, 28.62. And then again, whether I add additional targets depends on if and when the market gives me those sell signals I've been waiting for, the next sell signals. I'm not going to go over all the alerts for the last 30 days. These are just all, again, I'm going back. Those were all today. This is yesterday. I got this one, DRVN. It just barely punched through and the volume's not there. This was a long setup I had coming off a divergent low and auto truck dealership. But it broke out. You probably can't see my volume bars. I can just tell you it's not the type of volume I want to see on a long side breakout. And then it followed through today, but again, they sold it pretty hard and we're close enough. So if we can rally up through here, especially take out today's highs, or if you see volume coming into the stock and it can remain above 1459 and you're looking for some longs, set a stop somewhat below. There's a massive gap up there, and then the 200s it might want to get to, but me personally, I'm passing on this one for now. I'm watching it, but just like I said, sharing the alerts that went off today. This one I got the alert on the 6th, so 2 days ago, and my alert was under this uptrend line here. So you've had a series of breakdowns. Bearish rising wedge, divergent high, breakdown 1. Then you had support here, then a solid break of the support, impulsive, went down to my next target there, rallied back into support once broken, and 137 then becomes resistance, rejection. So it's playing very well to the technicals. And then broke down the other day and took out the 200 exponential today. And so this breakdown here opens the door for a move down to my next target down there, about 93.80 on PDD. XLY, again, this goes back, this was what, Tuesday, I think, on the 5th, whatever that was. And like I told you, a lot of these indexes have just been flirting with these key trend lines. I've covered these ad nauseum recently, and so it's still on there. Again, if we want to see collectively the top 4 indexes that are in the S&P 500, which is XLK, the tech sector, XLV, the healthcare sector, XLF, the financials, and XLY, consumer discretionary. And so we're right on the line now. So I'm just going over the alerts as they are. This was a silver stock. You guys know last week I got very bullish on silver stocks and shared some of my favorites. This one broke out and still running. It's a low price one. I don't think maybe I did. It's actually, it trades on the Toronto Stock Exchange. A lot of times if you type in the symbol, if you see .to, that's the Toronto Exchange, you can type in, they probably have US listed shares, but you can see trendline break and it's running. REGN, Regeneron, Biotech. It's flirting. It broke down and it's back testing the trend line. My alert went off the other day right there on that one. I haven't marked up targets. Personally didn't take this one, but there's would be the first target. It's back testing its objective on a back test. All the better if it gets rejected, and even better if it takes out the recent lows. Plus there was a little bit of resistance here, and that came to be support. So break above 958, solid break. A little bit below that should do the trick. Open up to 926.50, and then the primary or longer term uptrend line and 844. I would say swing 844. It's probably going to swing down, come back down, test the 200s and 844 on that one. So that would give you about a 13% profit on a short from where it's at now. So let's see, what else do I have here? ABVV or ABBV, AbbVie. Give me an alert, but that was just an opening pop. You can see this is why you wait for these solid daily candles. And so I'm right. This one's really hugging the trend line, riding it up tight, ready to go. Just needs a solid break, either a solid intraday break and or a daily close should do the trick. You can see I have it coming down to at least 167 or so right there. Maybe yeah, I'm gonna raise that line to right there. That covers these 2 recent reaction highs plus these 3 highs right there, major reaction highs, is about 168. It's a target on that one. And again, depends if and when it breaks down. If it does, that'll be about a 7% drop. Amazon, oh no, I clicked the wrong thing. I clicked on the list. I have to manually click on these. The rest are just these, remember XLV, healthcare, a little brief intraday or 1 day pop, but right, still hugging the yellow line. And I gave you, I think yesterday, this BOD or benefit of the doubt trend line that needs to go now. So that's actually, if I didn't already do it, that's where my alert needs to be at this point. Okay, I'm going to stop there. If I go back the last 30 days, you're going to see things like Kara and some of the silver miners, everything else we had. That's mostly it. And, oh, you know what? Let me do an update on the Treasury. So yesterday I showed you the yield. TNX is the yield of the 10-year bond. IEF is the Treasury, the ETF that tracks the 10-year. That's 7 to 10-year bonds. It's an ETF, so they try to keep expenses down. They can't roll every day. You buy a 10-year bond, and the second day you own it, it's got 9 months, 9 years and 9 months and 29 or 30 days or whatever. So what they do is they'll roll them and try to keep, again, they're attempting to track the 10-year. And that's it. So I mentioned we were, as I told you in the post yesterday, we were just below my level. I mentioned it exactly where I have it at 95.41, and that's where we closed yesterday. And today, what did we hit? We hit a high of 95.39, close enough for government work. So there's the 10-year at resistance, hence the reason yesterday I expected today to be a red day for stocks and bonds. The sellers so far reversed off there. You can see the little wick, the skinny part. And again, TNX is the 10-year yield. Same thing. The yield is the bond price in reverse. You can see it's holding that. That's pretty decent. I give you circles as to why it's a support level. A lot of reactions, especially major peaks right there, and major reactions from below, reactions from above. And we went through it here a few times, but it's still been a level that, again, a level I think will come into play. And if so, covered it many times in the past. You go to IEF, turn off all your lines, and if there's any confusion about it, just go to Edit Chart Properties and look at the market. You can look at the S&P or the NASDAQ, and you can see that there's a very strong correlation. They tend to move up and down together. This is the disconnect I talked about recently. The stock market ignored. This is rising yields. Remember when bond prices fall, which I said in itself is a red flag, which I still maintain. I still think that mean reversion is coming. So far, we got it in with yields coming back down, meaning bonds up. But so if this happens again, the market's saying no, where it doesn't matter. It doesn't matter what the long bond's doing or the 10-year bond now, because the Fed's going to come to the rescue for me. So if you start to see this tick back down, which is what I think will happen, especially at least in the near term, that should put the brakes on the market. We'll see. Okay, I'm going to conclude the video just going over the charts of the futures as well. This is that QQQ 15-minute chart again from yesterday. There's the divergent high. First target is already covered, told you where I think this is going. But I want to just point out, remember, with the markets, kind of like that app, if any of you use on the phone, if this, then that, IFTT is the name of the app, and you can trigger, all kinds of things to do it. If one thing, you set a parameter, if that thing happens, then the next thing will happen, and the thing after that. It's just remember that, keep in mind, smaller picture, because I made clear this is just active trader stuff. But let's just say that we do come down here, or we continue down, but this is a pretty decent divergent high. Then it has the potential to not just be a quick 2.5% or so pullback trade, or even more. It has the potential to then, if the Qs fall, it's going to potentially again take out some of those key support levels that I've been watching. So keep an eye on that, and just Just like every journey begins with the first step, every trend change begins with the first little, pullback, right? And so I know I've been looking for a lot of them and think the potential's there for a year. Not that we've been long. We had covered shorts. Remember, we came into the year short. I had to reiterate that and repress that to somebody yesterday. We came into the year shorted the Qs at the end of December, covered almost perfectly off the lows and went long. So covering all shorts, we're going to bounce. And we had a bounce trade on Apple and QQQ. And then most recently we had the 60-minute chart, kind of a scale in for a longer term swing short, entry 1, entry 2 on the breakdown. And now I'm going to go over the levels. So we've been backtest 1, almost a backtest on the primary trend line, still divergent high on the 60-minute chart. But let me give you some levels that I'm watching on the futures. This is ES. ES is the S&P 500 futures. This is a 60-minute chart, so 60-minute candles. This is the most recent divergent high. It's really one, it's been diverging. It comes back from this point. These were equal highs there, and now the divergence is steepening. So it's really goes like this. It's been just like everything else. But I think you can see I have an alert set at about 5,063 on the futures. Nice 1, 2 reaction highs, a breakout. That's the NVIDIA breakout, NVIDIA earnings breakout. Successfully backtested that level on multiple occasions on the 60-minute chart. And so I think that's will do the trick level to get some more downside. It's an important support level for me, and especially if we break it following that divergent high. And then the NASDAQ, I gave you those charts yesterday. There's the 5-minute chart if you're an active trader. The 15-minute chart is what I shared as well. Remember, this was the previous highs right there. So to make a divergent high, we had to equal that, which we did. It was right before the close. Like I said, we're a little lower when I did the video yesterday, and it's all the better. And then we got it yesterday at the close. We had an equal high and ever so slightly a fractional marginal pop in the open. And then boom, this is what happened, when a breakout fails. So new highs, bulls pile in, and then got, hit pretty hard on the reversal. So whoever bought that popped to new highs. Again, this is why I've said it once, I've said it 1,000 times. Breakouts to new highs that occur with overbought conditions and negative divergence have a much higher failure rate. So where, some might have been looking to go long the breakout, it was a breakout. I was already short into it, but, yesterday, as I told you, but it has pretty, potential intermediate term bearish implications. And then a big level, I'm going to set it right now. I'm going to move this line. Let me delete this one and move this one down. You can see we have 2 major reaction lows right here. That's probably that same, that's the post NVIDIA earnings pop. And so there's the big level, and I'm going to make that a price alert, and then I will wrap this video up. Attach alert. Here's the benefit of futures. You can have that alert go off after hours. Tends to happen a lot. What that does, it traps longs in. Let's say you're a QQQ trader and you're long the Qs, and you're going to have and then, we might get down there, and then that night it might break and be running down, and then at 9:30 the next morning when the market opens, Qs have already dropped 2-3%, and then, or the futures, and then the QQQ is going to open up on a big gap down. Again, I'm just saying it happens quite a bit, and that's where stock futures, you can set, if you are bull and long, and you buy a pullback, your plans to buy a pullback to that level, you can set your stop right there. You don't have to use stop limit orders. You can use a stop loss order. There's plenty of liquidity in NQ, after hours. And so if it does do this overnight, then you're stopped out there, not on a big opening gap with order imbalances like you would be on QQQ. All right, that's it. So like I said, this, I guess the takeaway, guys, when I was saying the whole if this and that thing is, this has, like all of them lately, has the potential. I'm not going to waver on that. Has the potential to be a runner trade. What's a runner trade? Well, it starts out as a little active trade, and boom, if we keep going down and smashing through support levels, you can just keep lowering stops to protect profits, periodically ratchet them down, or run a trailing stop. You got to, know your security and know how much the kickbacks usually are, so you don't get stopped out. If you're running a 0.5% trailing stop on an NQ swing short, you're going to get stopped out in the intraday noise. But so you got to pick where your stop is. Right now, we made a turn there, so we have no business at this point after that big rejection going above that recent high. So minimum a stop right there, especially if you're swing trading. If you're active trading, you want to maybe tighter stop, depending on your trading plan. But So that's how it works. If we go down here and then we break that level and the comparable one I just showed you on ES, the S&P 500 futures, you could probably replicate that on QQQ and SPY if those happened during the regular trading session. I'm not sure if they did. And then watch those levels, and you know, they're also, you know, more of levels that if and when broken would be objective short entries for a swing position, but that's conditional. It's conditional on at the same time if we break 17,830 on NQ and I have XLK, XLV, XLF, Apple, you know, most of the market leading former Mag 7 stocks at or above support, and they haven't broken, then I would personally want to wait to see those guys, at least the majority of those break down, or, you know, at least a handful of them, a third. Again, there's not any, you know, try to keep it as simple as possible here. There's no all or none kind of thing. It's a combination, and I think I've done a very good job of keeping it very simple lately with my yellow lines, you know, yellow key levels, and so speaking to swing traders, and then for active traders, you know, I know at least one person said they took this trade. So if just one person on the site, you know, likes this kind of stuff, then I'm going to share it, and I'll do my best to differentiate that, hey, you know, for active traders, and, you know, if you're a swing trader, then you want to see X, Y, and Z instead of A, B, and C. All right, guys, I am going to wrap it up. I just had an alert on a stock called CAMT. Let me CAMT, I think, did I already cover it? I might have had another alert. This one right here, it's a semiconductor, very close aligned, big divergence. I mean, same story on all the semis. And remember, once they kill the beast, which is this one, then the semis are done. They're done. But again, to kill it, there it is. What does it take, Randy, to kill? Well, it would be nice to see a bearish engulfing that doesn't, you know, rally back above. It'd be even better to see a break of 742, and it'd be, in my opinion, like, you know, very, very big to see 630. And then I still have the purple lines that I had from last year, the same lines we went long, everything right here in October, covered all shorts, and that's it. And that's what happened in NVIDIA. And I tried to, you know, we shorted pre-earnings. It was a big, you know, gain, posted a little, you know, quick trade pop before the earnings and went up. And so it's still very much on my radar. I just wanted to say that. It just needs it's got to do a little work to make for, you know, a strong case to tuck it away as a swing or trend short. And then that SMCI, I told you, my plan, again, it's just me, put that one away as a swing trade. Really nice, you know, and I moved this over here. Remember, we had a potential bearish, it was a bearish engulfing candle, but then it got taken out the other day. So that it's no longer a topping stick. It just happened to be a big red candle. Now, just like NVIDIA today, we have a potential bearish engulfing again right here that engulfs the previous two candles so far. And so I'm just moving that over there. I don't even need to change. I put a question mark. Why? Because the day is not over. This is a daily chart. We're gonna have to close below the body of yesterday's candle, the fat part. And then, even better, you can see the uptrend line, aka bearish rising wedge. And my sole price target has not changed. 355.60, obviously cover a little bit above that. And which, if hit, it's going to be the same thing. I'm right almost back to break even. I shorted it right, you know, that right there, right at the highs there. So almost back to even. And from where we're at now, if it does hit that level, and I know very few see that or believe it, and I can't guarantee it, but that's about a 67% drop. So well worth it for me to sit tight on this one and give it some time, because I have a pretty high degree of confidence this was a buying climax when I look at the volume, and I look at this big negative divergence, and I see a stock that's, you know, not gone parabolic, nearly parabolic. All right, guys, I'm going to wrap it up here, get the video out to you. This has been Randy Finney with the Right Side of the Chart. Have a great day.